Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, of course, we cover the big news that came out over the weekend, which is the launch of the FCB additional public offering by the offerer, the government of Trinidad and Tobago, ultimately. Investors would recall that the Honorable Minister, in his budget speech, the 2016 budget speech, spoke to the need for divestment and mentioned that among some of the shares to be divested would be FCB. And so it is that this issue has come to market via an additional public offering, and we will speak to the differences of an additional public offering versus an initial public offer in due course. What is the purpose of the issue? Of course, it is to fill or partially fill the fiscal gap of some $16 billion as was estimated in the budget. And so let's look at some of the factors with respect to the issue. As we said, the purpose is to fill the fiscal gap. Number of shares on offer, $48.5 million at an offer price of $32, which was the closing price of FCB on the last trading day, which was Friday. Expected to be raised a minimum of $1.5 billion, and it constitutes 25% of the shares in FCB held by the government ultimately, and it constitutes some 19% of the overall shares in issue. Let's look at how the offer is constructed. We got the prospectus on Sunday morning and did some work to see what the difference is in terms of the IPO done 3 years ago and this additional public offering which is on the cards. Well, very good news, first of all. In the first case, which was the IPO, employees of First were entitled to participate up to the level of $7 million of the $48.5 million share of 15%. In this case, what has happened is there is a 5% availability for the ISAP of the FCB. Now, secondly, the availability to individuals. In that IPO, there was much contention, you would recall, with how much individuals got, to the tune of 15% of the offer. Good news is that 55% of the shares, constituting some 26 million shares, is going to be made available first to the individuals, nationals of the country as well as non-nationals. So, and thereafter, the shares cascade down, meaning that if all the shares in the individual buckets are not taken up, they then go to the next level, and that next level would be pensions, credit union, co-ops, to the tune of 25%, plus whatever cascades down, and that 25% is 12 million shares. Then next, of course, mutual funds to the tune of 25% or 12 million shares, as you would see on your screen. And then, sorry, that's the wrong figures that I'm giving you. Mutual funds, 10% in this case. In pension funds, another 15%. Then to the NIB, 10%. And then we go to other companies. Difference is, one is the larger cohort for individuals. Two, that non-nationals are to be included in terms of the investments, this investment that they can participate in. Let's go to our next slide, and let's see what's happening there. In terms of some of the key dates for the issue, it's going to be a very short and tight issue, meaning that the issue opens today, on today, March 13th, and closes, the first closing, let us say, is the 24th of March. So you would see the offer commences here, commencement date, final applications on the 24th, as you would see here, and then return of funds, alignment of shares as given out and as allocated, and notification of allotment on the 25th. Note here that there is some space in the event that there is the need for some extension of the offer. And it appears that in here, between the 24th and the 18th, there may be some provision. Let's look at what has happened with the valuation or the share pricing over the past year. And this graph shows you what has been happening to the share price. If you look at it 1 year ago, the price was about $35, as you would see here. And there have been some blips in early June where the price went down to a low of $29.50 just for a short period, climbed back up to the $34, $35 range, fell to $31 in November, climbs back up to about $34 thereabout, and for the last month or so has been trading at about $32 per share. What is important to note as well is that in the last year, just about 1.9 million shares have been traded. This additional public offering is for a rollout of 48 million shares. Investors who would have thought that there might be a nice kick or a discount in the pricing, that is individual investment, may be disappointed because with the additional public offering, it comes in at the closing price. Reasons for this? There may be some legal and regulatory reasons, but it does appear that to meet the minimum of $1.5 billion, the share price would have had to be at around the $32 figure in order to generate on 48.5 million shares these figures. Let's turn to our final graph now. When we look at our final table, what is the valuation? Way back in 2013, the multiple was 9.4. It is now a higher multiple of 12.6. The higher the multiple, the less headroom in terms of the ceiling for increases in the price. Market to book, I'll stay away from that. Dividend, good dividend on the stock. At ab initio, it was at 4.8%. It is still a reasonably good dividend of 4.16%. Dividend per share is now in the vicinity of $1.33. Those are the things for consideration of the investors. If you need more information as to what to do with this particular stock, call us at Bourse and let's see what advice we can give you at these numbers. At our website, you will see more information with regard to this and other issues and results that have come out in the main FCI, as well as two other shares that we have made recommendations on. Have yourself a wonderful investment week, and I'll see you a little bit later in this particular session.